Kate, I believe you have another speaker lined up for me.
Yeah, we've got Anka Metcalf.
Anka, baby, how you doing?
Hi, John. Hi, Kate. How are you guys? Hi,
Where are you
everybody.
broadcasting from today? I never know where you are.
I
You're such
know,
a
I'm just
fast-moving
moving.
target.
I'm still in Boca Raton.
Oh, that sounds nice. But you had that horrible heat wave last week, didn't you? Didn't it get
Yeah,
over
we did.
110?
Yeah, we did. Everybody was at the beach.
Yeah, wow. Big surprise there.
We just like rode that heat wave out.
Yeah, absolutely. Well, we're doing the same here. Okay, Anka, go ahead and get your PowerPoint up.
All
Anka
right.
Metcalf is a professional trader with 20 years plus of trading experience in stocks and futures. We spent over a decade working in investment banking prior to becoming a full-time trader. She is the founder and CEO of TradeOutLoud.com, an international trading education company designed to help any level trader fast track their trading and achieve their trading goals. She is an expert day trader, swing trader, and active investor with a precise approach to daily income, style, and wealth generation trading, delivering results in any market environment. Over the years, she has created a unique and highly successful, simple, and easy to follow trading system based on multi-layer price support and resistance levels, coordinated with proprietary trigger times, market tempo, multi-time frame alignment, synchronicity, divergency, and proprietary set of rules that enable her and her traders to be very selective, patient, and find high odds trades with ease and laser sharp precision. Okay, Anka, I see you have up here become a trading powerhouse in bright orange.
Yes.
Can't miss it. And you have until 5 minutes before the hour when we hand out our
Perfect.
next batch of prizes. I already see you have a comment here in the chat box. I am a huge Anka fan. So am I, as
Hey,
it turns out.
Tracy. Thank you.
Okay, I'm
All
going to go
right.
ahead and
Thank you
mute
so much,
myself,
guys.
and
Looking
you have the
forward.
floor.
Thank you. Thanks so much, John. Thank you, everybody. And first of all, thank you so much, John, for having me here today, and Kate for making all the work behind the scenes. So thank you so much. And welcome, everybody. And what an exciting time to trade. And definitely, it's really worth it. I am here to tell you that I wish I would have started earlier my day trading career. I have been an investor and I have been on the swing side for a very long time. But 20 years ago, I decided to dive into day trading. I quit my job and boom, here I am. Okay, so today's presentation is about becoming a powerhouse. So, what is a powerhouse? A powerhouse means that you are setting up the rules. Your charts are your employees, and your personal computer is right now your personal ATM. Make that happen. So, I'm not going to go really in depth into my bio. John did a wonderful presentation here, but I'm going to tell you this, that I focus on day trading futures for an hour, for basically the first hour. I do run a trading room that is basically open for about 2.5 hours every single day from 9 o'clock to 11:30. But basically, the time that we're in a trade is very minimum. So that means that your stress level is lower for the day because you're not going to take on a lot of risk. Your account is going to help you because, again, you're not taking a lot of risk. So basically, I trade 5 minute charts, and I do focus on 2 minute charts into the first 5 to 15 minutes as well. But if there aren't any opportunities there, because sometimes you have data like you had this morning, where the environment is not that favorable for a dynamic action. But when you don't have any kind of releases, let's say for the first 30 minutes or any at all for that matter, high impact releases, then you could go ahead and trade smaller time frames. So like John said, I'm a professional independent trader that is focused on trading stocks and futures. I'm day trading futures for my income and swing trading and actively investing in stocks. I have been doing this for over 20 years and investing probably more than 30 years. I come with 10 plus years in investment banking, so I didn't come new to the field. I didn't shift gears, and did flips just to become a day trader. So I have been, and I actually grew in this environment. My dad was an economist, so I grew in this market environment. So I run a swing trading service for stocks and ETFs since 2010, and I run a trading room since 2017, and this is by popular demand. All these services came on as popular demands. I never had them planned to teach or trade, live with a group of people ever before. So I do offer a trading education for swing trading and day trading, and we're going to have a brand new investing course that is coming up this summer that is going to blow your mind. More about that if you stay close to us and our email list. I am focused on high velocity trades, and in fact, what I do is I look for inflection points on technical charts that line up that can produce these explosive momentum trades. So I play the power momentum play. Now, why should you be here and why should you guys be listening to me? Okay, so who am I? Like I said, I do come with vast experience into the market. I trade my own trading accounts, but do I deliver any results? Well, I do. Income trading is basically instant gratification, right? And I'm going to show you how instant gratification looked for me in 2023. This is my account, and this is the 2023. And by the way, if you're thinking it's like, yeah, okay, this is just 2023, I'm going to show you in a second the 2024, and you're going to go like, oh yeah, this is just 2 years. No, I have all the years just like this, track record, transparent track record with all the trades, all the symbols, direction, entry prices, stop prices, target levels, and P&L, like through the last 10 to 20 years. So yes, I do have that, and it's on our website for everybody to see. But this is 2023. You can see here it started with 0, right? And this is the profit, right? This is not my account size. This is the profit. And I took the profit all the way to $1.25 million right here into the end of December. Now, this is last year, and this is why you should be, and this is why I'm considering myself, as a speaker, as the right to speak to you, because I do deliver results. And these are just my commissions. $30,000 in commissions alone last year. This is what I made last year. This is 2024. I took the snapshot just before I came into this presentation. So year to date, this is my profit, 307. It has been a pretty rough year. My win ratio, you can see it right here. This is why I printed out this sheet right here. And you can see January 1st through June 5th. Today is June 5th, right? So this includes the trades that we did today. So the win ratio is 59%. So if you want to find out more about us, our results, you could go to our website, and under each service that we offer, if you scroll to the very end of the page, you're going to find all our track record. So basically what I do is I trade for a living. And when you trade for a living, you don't have a boss, you don't need to commute, you don't need any literally customers, you don't need clients, you don't need emails, you don't need any kind of interaction. It's just you, your computer, and I can teach you how to do it. Turn your computer into your personal ATM. This is your goal right now, to try to start printing money. And why? Because inflation, right? And inflation is basically burning a big hole in our accounts right now. And this is the perfect time to learn how to trade your way to financial freedom. Because what happens when you generate income or when you generate extra income? This is not only for generating income, it's my main source of income generation that pays off for my bills and everything else. But what happens after I pay all my bills? I take that portion that is left over from paying everything off, and I put it into a swing trading account, and I also compound into my investing account. So for example, what I did in the month of May with the extra profit that I had, guess what I did? I bought more Nvidia. Okay. So I bought more Nvidia. I bought Nvidia into my swing trading account. I bought Nvidia into my investing account. I bought Nvidia into my IRA accounts. So I bought a lot of Nvidia, right? So you guys know Nvidia is super hot right now. I have been holding Nvidia. The first time when I started investing in Nvidia was in 2016, and I have been holding that for a really long time, right? So if you think about it, so the market is a permanent transfer of wealth from the novice trader to the educated trader. I'm pretty sure you know that, because the educated trader is going to never get demoralized when they have a loss. So for example, let me just give you a glimpse of my trading day today. This morning started out with a trade in NASDAQ, and at the same time, the S&P was lining up. So I had a trade in the S&P and I had a trade in NASDAQ. What happened is NASDAQ achieved target 1, then it started to pull back. I didn't take profits the first time around at target 1, and it started to pull back. Now what happened, at the same time from the pullback, because we had the 945 news, we didn't have much reaction, but at 10 o'clock, the market came back down. And as you guys know, the S&P made a new low for the New York trading session. So the first 15 minutes of the trading session did not hold. So it swung down. So what it did, it stopped me out. So I had one stop, and I was still in one trade in NASDAQ, but I was now underwater in NASDAQ. My stop was still holding, and I didn't take partial profit. So the next time that NASDAQ hit, again, my profit target into the 850, I literally took the profits. And then when it turned around, I kept my original stop. But I didn't get demoralized and say, I freaked out and say, oh my God, I had a loss. This is the end of the world. I'm not going to get back in. This market is chopped. Yeah, it is. The market is horrendous right now. And it's literally hysterical the way it is trading, because it's horrible. It does have the long directional bias, but there's a lot of fleecing, back and forth action. And if you don't have the proper risk tolerance and the proper mindset, it could scare you and it could spook you. So what I did is I saw another trade opportunity. So I just have to share this this with you. Yes.
Sorry to interrupt. I think you might need to look at your slides. We might need to reconfigure. They might not be lined up with what you're saying right now.
Okay. Is this okay? Thanks so much, Kate. How's this?
Yeah. We're still seeing the wealth transfer. So I think that's your title slide. Maybe you're
Okay. How about now? Can you guys see it?
Now, yep, now we can see it moving. Okay.
Okay. Cool.
Awesome.
Cool.
Thank you.
All right. All right.
You're good now. Yeah.
All right. Thanks so much. All right. Because I wanted to take you guys and I wanted to share a different screen right now. So I hope you guys can see it. I see that I'm projecting a different screen. So I'm having the charts up now. I hope you guys can see them. All right. So this is the trade that I was telling you guys about. So I was in the S&P and I was in NASDAQ, and I think it's more important for you to understand where the fleecing effect is coming from. So first of all, we had this rotation that was happening, and we had this level right here that was holding into the 800, actually had a stop into the 810 area. And we had this really nice rotation that took the price all the way to 50s. And honestly, this 60 wasn't hit until 10 o'clock. So by the way, when we hit the 50 here, I didn't take profit. I let the trade go back down, and I'm like, oh, that was a big mistake. And then it came back. Definitely I took partial profits, a little bit more than half. And then I kept my original stop, and I was stopped out. Well, if I think back about like 20 years ago, and the way I was trading, I would have been freaked out and said, you know what, I'm not going to trade anymore. I took a small loss here and I'm done. But the reality is that you need to be focused all the time, all the time. So what I did is I looked after these economic releases, and I said, like, man, this is so odd, because it punched down right to the pivot, and then the price zipped back up and closed into the high. So this is a major decision point here into the 60. We knew that we had targets into the 50 and 60, and we knew that was a massive inflection point right there. That the market needed to mark, stay above, and needed to establish a support into 60 in order to start moving higher. So what I did is I waited. So I needed the price action to be a little bit more compact in action. So this bar doesn't really show a lot of, significance. It just tested the prior low. It's not a compact, the price is not compacting here. But I was looking, and I was literally shifting my attention from 5 minute to 5 minute to 5 minute. So I was like a sniper. And once we got in here, I'm like, yeah, this is very interesting. So I decided, I love the fact that this is an inside bar. So there was a lot of energy coiling into this pressure area. So what I really wanted is to take it over the high, have the same stop into the 810. And this is what we did. So we took it at here at 845. We had our stop into the 810, and we had targets all the way to 900 and 940. And this is where we trailed out. We trailed out at 920. Guess why? Because I had to be here. Okay. Other than that, we would have waited for a pivot formation, placed our stop at 900, and we would have been again over 100 points. But we ended up the day with over, I think, like 80 points or 87 points or something like that. So anyways, so as I was mentioning, the market is a permanent transfer of energy, of wealth, from the novice trader to the astute educated trader. So you have to have the courage to get back in if you see the setup forming, and if you see that the setup is aligned with the market direction and with your strategy that you have established the morning of the day before you started to trade. The markets will remain very volatile through 2024, and investors are still fearful in some sectors. That's why you're seeing this hiccup action into the market. The market moves up, stalls. It's just like a hiccup, pulls back. Sometimes it has a shallow pullback. Sometimes it has a little bit more steeper pullback, and then it rallies again. One other big concern that I have about this volatile market through 2024 is that I have noticed throughout the last 2 to 3 weeks that we're having lower volume in the market. Now, as you know, the earnings season is winding down, and definitely there is not much interest in stocks that have already reported earnings, right? These power players that have the capability to move the market, stocks like Google, like Apple, like Boeing, like UNH, like Goldman Sachs, like Microsoft, like Caterpillar. So these are the power players into the market. Market will remain relatively thin as we're heading again into the contract roll. If you guys are trading futures, you know that that's, fast approaching, and we're going to start trading in 10 days or so. We're going to start trading the September contract. We also have the quadruple witching option expiration, which is a big doozy that is happening in the market. Everything expires, except for futures that roll. And at the end of the month, guess what? My focus is to literally be super, super attentive to stocks that have made new highs for the year, stocks that have been extremely performant within the last 3 months, because they will have the capability to move faster, higher within the last 4 to 5 days of the quarter because of window dressing, because of the window dressing phenomenon. So bottom line is that markets may remain volatile and will remain thin, in my opinion, until the next start of earnings season, which is going to be in July. So it's going to be like in a month and a week from today. Why is it going to be volatile? Well, first of all, it's an election year. The markets are going to start calming down come September and October. October is known as being the most volatile month of the year. So you're going to see a lot of balancing right there. You're going to see a lot of things that are going to shift, a lot of profit taking, and a lot of sector rotations as we're going into election, because there are stocks that are going to be safer and considered safe haven as we're heading into the election closer to November. First of all, the Russia-Ukraine saga will continue. So that's not going to stop, at least until election. And we're going to see the election results, and that might change the activity of the conflict. You have the Israel-Hamas war. You have the FOMC rate surprises. By the way, next week on June 12th, you have the FOMC rate decision again. You have inflation, which is still super high. Massive layoffs still continue. If you're watching the news, if you're paying attention, lots of layoffs. Energy crisis, I'm seeing right now, barrel is under $73. The price in oil. And is there going to be a recession or not? So bottom line is that regardless of the market activity, you can still make money when you're day trading and when you're swing trading. And bottom line is that as we're getting closer into election year, it is always safer to have less money engaged into the market and more money into day trading. Because in day trading, you basically get in and out within the same day without having to carry the stocks or without having to carry the futures, indices or commodities or bonds through the weekend or through any kind of event. The election event is going to be really volatile. I usually leave the trading room open on election day. And about two election cycles in 2000, I believe it was in 2016 when we kept it open, and we had a blast. We made so much money. I believe it was in the Dow. So this presentation is for you guys that are here. If you want to trade in sync with the powerhouse, with the power institutional money, why do we need to follow and we need to pay attention to what institutions are doing? Because they are creating the volatility, they are creating the volume, they're creating the prints. And we need to be in sync with that momentum, in sync with their money, in sync with their sector rotations to see what's in play. Because, for example, today we had a divergent market. We had the Dow that was moving down. We had NASDAQ that was shifting up. NASDAQ was holding the base, was holding a beautiful base. It had a wonderful breakout and it went higher because it had a relative strength. And the stocks that were moving today were mostly the tech stocks. So if you're ready to eliminate frustration from trading, you got to have a plan. You got to be chill about the market, and you have to be very knowledgeable about the market. If you want to trade with clarity and stress-free, you have to have your own game plan. You have to know which direction from before the market opens. I always do a pre-market game plan before I open and decide my directional bias. And I'm not changing because I have my levels. I'm not going to say, oh, I am bullish. And all of a sudden at the open or within let's say the next hour, I go like, oh, I'm going to be bearish. So if you're ready to become a consistent trader and eliminate the noise, this presentation is for you. And if you're ready to learn a methodology that works in any asset, because when you're learning how to trade, it doesn't really matter whether I'm going to throw, let's say a bonds trade in front of you, bonds futures, if I'm going to put gold in front of you, if I put an index in front of you, a futures index, or if I put NVIDIA in front of you, or if I put a crypto asset in front of you, or if I put the euro dollar in front of you, they all trade the same. You have to respect the technical patterns, and everything is technical right now. It's only like 1 to 2% fundamental, and everything is so technical. And the reason for that is because of the presence of algorithms. Algorithms are impacting our lives for the best. I love algorithms. Why? Because we can trade precisely and mechanically with the help of algorithms. It's so much easier to trade now than 20 to 25 years ago, when especially the stock market was mostly influenced by fundamentals. Now we have more technicals. In fact, how many of you guys remember that 25 years ago, you would see Kramer on CNBC just talking purely fundamentals? There was not one technical chart in front of him, not one. Okay, and he was talking 100% fundamental on the fundamental side. Now all you do is you have traders that are coming with technical charts for him. Okay, so all you need is good education. I don't care where you're getting education, but don't just open an account and start trading. And I see the tendency out there is that traders open an account and start trading options, and what do you think the end result is going to be? They're blowing up their accounts. Okay, they're doing ODTEs, and I mean, really, okay, you need to have discipline. Discipline for what? Discipline to implement your education, discipline to wait for your setup, discipline to wait for the proper timing into the market. And you need to have patience. You need to develop patience to see where the pattern is forming at. Is it, have the patience, have a wide enough time frame that you're trading in which you can take decisions, especially if you're a beginner trader. A beginner trader should be trading on the 5 or the 15-minute chart, not on the 1 and the 2, because you don't have the necessary equipment to take decisions that fast. You're not an algo. So as a human, you need to have a little bit more time and say, what is my entry? What is my stop? What are my targets? And what is my position sizing? Because that's the most important of all. And you need to focus. And trust me when I tell you this, when I was first day trading and, starting to trade, a couple of years later, I took a mentor and I was forced to trade each time frame for about 3 months and then compare to the results after a year. So it was kind of like a long process, but this long process has helped me in the long run. The best results I got from the 3 months where I've traded the 5-minute and the 15-minute. The reality is that when I was trading just the 1 minute and the 2 minute, I had lots of losses and I incurred tons of losses. The moment that I shifted those 3 months into the 5-minute and another 3 months into the 15-minute, not only that I have erased those losses in less than 10 to 15 days, but I started to make mega profits. So that is a huge secret that nobody's going to tell you about. So why do traders fail? Well, like I said, a lot of traders think that they're going to get rich quick by trading options. And I don't have anything against options. I rarely trade options because I'm like a pure price trader into swing trading common or futures. But the reality is that, everybody's looking for that shortcut and it's not there. Okay, it's not there. Doctors take 7 years plus training plus license, right? Lawyers take 4 years, law school, bar exam, etc. But traders, no experience, no trading, bam, I'm going to start tomorrow and I'm going to get rich quick, or I'm going to grow my retirement account, or I'm going to, start generating income or supplementing my income. It doesn't make sense. It literally took me, and I started making money, like I said, within the first 6 months of trading, like literally, and I have proof in that sense. So I back everything that I'm saying here with proof. So if somebody asks me for proof, I can provide it. So the bottom line is that, yes, I started being profitable into the first 6 months. However, I was trading a very small size. My risk was $100 per trade. So I understood that risk plays a major role in position sizing, whether it's in futures or whether it is in Forex or whether it is in stocks. I've traded everything. So the most important parts of trading are rarely discussed, like confidence. Why do you think I'm so confident when I'm trading? Because I'm backing it with my trading experience and my trading education. I have conviction because I know where the levels are at. I know where support is. I know where resistance is. I know where my confluence support levels are. I know what the trend is. I know what the institutional power moves are lining up into. I'm smart enough to look at the stock market and see how the stock market is performing within the first 5 to 10 minutes or even 15 minutes in the morning to have a better idea of what I need to be trading in the futures market. A lot of traders are trading blindly in the futures market and they're just focused on the mini S&P. We're newsflash. Today, the mini S&P did not have such a great performance. In fact, at this point in time, it's just a little bit over 0.5% up, while NASDAQ is up 1.5%. I don't know you guys, but when I get into a trade, I like that trade to work for me and deliver more than the rest of the indices. That's why I put the effort into categorizing my trades into on my leaderboard in relative weakness, relative strength, and I'm trying to see if they are all in sync or if they're desynchronized. And today it was a perfect example because there was a major shift and not only that, and a major difference between the activity in the Dow, the S&P Russell, and the activity in NASDAQ. So I knew right from the open that I'm going to be focusing on NASDAQ, and this is what I did. So discipline, education, preparation. So all these elements represent more than 90% of your trading. So you can see that execution only represents about 10%. So what you need right now, so if you want to get into trading, is that burning desire. I had the burning desire to get into day trading because I was sick and tired of somebody else handling my money, and not only that, and paying tons of commissions, and not only that, but I was sick and tired of the commute time. So you have to ask yourself, how bad do you want it? And if you want it really bad, then you invest in yourself, and you invest in your education, and you invest in the research, whether you want to do it on your own or if you want to get some help. Because education is your foundation. And from that point on, don't think that you're getting your education and you're going to be like super smart. No, it takes years of experience. It takes years to gain the experience and years to develop tolerance and risk tolerance. Then you have to have the discipline to follow the plan, the patience to wait for the opportunity, the focus with no distractions. Like I don't even have a phone here. My doors to the office are closed. I don't have my TV on or any other media outlet that is on. It's just me with the charts. Why? Because first of all, when I'm day trading, I'm only here to trade for about an hour. And most of the time I'm in the trade just for 5 to 10 minutes, boom, and I'm done. All right, so what to trade if you're very new to futures trading. So basically this is the panel. There's not much scanning that you need to do. My employees are the indices. So I trade the Dow, the S&P, NASDAQ, and Russell, and this is what I day trade. I also obviously have this whole other panel to scan through and sift every single day to see if there is any momentum. So yes, I do look at oil. Yes, I do look at gold. In fact, I do have a key level in gold right now, which is into the 2380 and 2390. I would like to enter half a position for a swing at 2380 and the other half to add at 2390. We have been last month in a trade in gold that delivered big time. We have been in a trade in natural gas that delivered, that actually literally made my whole entire quarter. It delivered big time, but mostly the indices, you have the volume, you have the nice volatility, you have velocity that is coming from these indices. These are going to be your employees. Trading is a rule-based system. Why do you think it's a rule-based system? Well, first of all, it's a rule-based system because it's the programming is created literally by algos, right? The algos are having a big say. Remember yesterday with the chop. Remember Friday, right? Buying programs. So that is the calibration that happened at the end of the month. And we talked about it in the trading room a lot throughout whole last week, because there are certain phenomena that you need to know how to trade. And I tell my traders, hey, while you're here. And if you want to learn, get a planner and write these things down. Because next time when you're going to be trading the end of the month, next time when you're going to be trading the option expiration, next time when you're going to be trading different events in the market, you should know what is going to impact price and what they tend to do with price around these days. Trading is about finding higher odds trade, just like we did in NASDAQ. So first of all, this morning we had NASDAQ and we have the S&P, which were pretty much into similar patterns. The rest of the indices were not really on track with what NASDAQ and S&P was doing. Then our next job is to wait for the setup. You just have to wait. You just don't jump in. You have to wait until you have the proper entry, the proper stop. And that's simple because it's so technical. We look for technical rotations. We look for breakouts. We have, 10 strategies that we stock for and that we also teach in our classes. Fine and precise execution. I'm a true believer in the entry, stop, target. Everything should be as easy as that. Sometimes you may not have a market as that. Let's say a couple of times a year when you're going to have price action trading, but we're handling that as well really well. You have to have good money management skills, because if you don't have money management skills, you're either going to get out of the trade too early, or you're not going to know how to take profits and where to take partial profits. You're not going to know what to do after you take partial profits, where you're going to lift your stop. So you need to have all these You need to have all these answers to your questions, and of course, mindset. So for those of you here that are mostly trading stocks and day trading stocks, not a lot of traders trade futures. Futures were not at all popular when I started trading futures. And by the way, I was a full-time stock trader. I started trading futures back in 2015 full-time. And that is because my accountant advised me to switch from stock trading to futures trading because of the taxes. Right? I now pay better taxes because of that. But you can take on a short position easily. You have the advantage of buying power. You have reliable volume. You're trading major markets. You're trading NASDAQ, right? You're trading the S&P. So you're trading big markets. You could actually trade it for income and wealth. You could hedge with this. So that's amazing if you're a swing trader. You have different tick values and price ranges. And starting with, I think it was in 2019, the CME first came out with micros, and that's a tenth of the size of the full size contract. So it's a little slice of the big contract of the futures, right? So you can trade now futures, even if you have a smaller account, because you have access to the minis and the micros. You don't need to use a scanner, obviously, when you're trading futures, because basically you're just looking at those 4 charts, those 4 indices, or if you're like me, you're looking at 6 charts, right? And you're looking at gold and oil as well, so you don't need a lot of real estate for that. There's also the tax advantages that are there. Talk to your CPAs. There's no pump and dump. That's a big plus. It's safe from rumors, no manipulations, no downgrades, no upgrades. And what I do love the most is that you get the 24 hours HOR. That's the hand-on risk. So if I put a swing trade on right now, and if there is some momentum that is shifting, let's say at 9 o'clock or 10 o'clock at night, I could decide I could take myself out of the trade. I could take partial profits. I could raise my stop, or I can add to my trade. So it's a hands-on risk. That's a huge advantage that you don't have in the stock market. Talking about the futures account size. Well, if you want to open a day trading account, you need to have at least $25,000 to open that. And you guys know that if you lose a penny, your day trading status at the door. So you need to come up with at least 30,000 because of the day trading pattern rule. In futures trading, beauty about it is that you can open an account with as little as $5,000 and you could get 10-to-1 leverage. And basically, as long as you have sufficient cash in your account to trade the index or the commodity, you could still trade even if you go below $5,000. So that's pretty neat. So I want to show you an example here between futures and between the major ETFs, right? Between, let's say, the Qs, right? Because this example is for the Qs. So I want to show you side by side. So let's say the trader wants to trade, let's say the trader wants to trade the Qs. Let's say the Qs are trading at $365 and you need about $14,000 to buy 100 shares. And if the price goes up 50 cents, then you're going to make $50 because each cent is $1. And that's for newer traders in case you don't know. But if a trader wants to day trade NASDAQ futures, which let's say it's priced at right now, it's $18,000. The trader needs about $17,000 to buy one contract. And if the price goes down 50 points, that's over $1,000. Today, we made over 87 points in NASDAQ alone. So keep in mind, that's per contract. So we made way more than $1,000 per contract on that one because each point is $20. So I'm going to show you side by side. This is a chart of the Qs, right? Everybody's familiar with the Qs. Here we had a pretty much kind of same strategy that we traded today. It's our signature in and out. And we actually bought it here. We had a stop below this pivot low right here. You can see the entry price 306.63. This is an older example from last year. And the buying power in effect is $15,000 for 100 shares. And the price went up. Yes, that's not, based on our analysis and everything. Yes. So on this trade, we made $303. Now, remember that this trade is an example of what you can do with the buying power, right? With the buying power. So this is $15,000 in buying power. This is NASDAQ and the buying power here is 17,000. This is the corresponding with one contract. The same entry, you can see right here that the charts are carbon copied because they're absolutely identical. And with one contract from the entry to the final price where it is was trading at that moment, $2,400, over $2,400 in the same amount of time with the same amount of money that you would be trading the Qs. Is that, so I hope we're on the right page, right? So, but there's more, okay? Wait, there's more. With a buying power of $1,700, equivalent with one contract using micros, which is 1/10 of the size of the full size contract. Same in and out setup, same stop into the end of the day, $246. Using $1,738. I don't know you guys, but when I first started trading in 2015 futures, I was like blown away. I was like, tell me what? Like what? Are you serious? Okay. So I didn't have anybody to tell me how to trade futures because I was a very good trader. But I've noticed that the buying power, so I wasn't really aware of this. Guess what? The same year at the end, so the same year, so I started trading in January, okay, 2015. The same year at the end, guess what happened? That is when everything shifted. And that is when Goldman Sachs, Morgan Stanley, JP Morgan allocated more traders to the futures desk than they had at their stock trading desk. Let me show you another example. This is the SPYs, $20,000 in buying power, 100 shares. You can see the same signature buy right here, the in and out. This is the stop. This is the in and out. This is the velocity that is lining up with the timing into the market at 1 o'clock. Or 1 o'clock to 1:15 is a powerful trigger time into the market, and especially for ETFs. 100 shares, $262. This is perfect, right? But what if I showed you another chart right here? This is the buying power NES. And by the way, here I was with 4 contracts. I didn't want to eliminate my trade just for this example, for the example that I was using. But this is basically what we had here was about $12,000. $12,000 in buying power for one contract. And this is the result for one contract. Okay, so this is pretty cool. Now, this is MES. MES is the futures contract. You can see here, let's say $1,200 roughly in buying power. And this is 1 micro. You can see the result right here. This is 1,000. Oh, this is $127 using $1,000. I don't know in what world, but guys, this is literally 10%. Literally 10%. Now, let's talk about the differences between the futures market and the stock market. Well, the stock market is trading from 9:30 to 4 o'clock. The futures market is open literally almost 24 hours a day, 6 days a week. It opens on Sunday night, closes on Friday night. Now, geopolitical events do not wait for the market to open. Events happen, and many markets that affect the U.S. markets trade outside of the U.S. market hours, and you're going to get a lot of movement in the overnight. We teach our traders when to trade. Now, there are a few things and a few tricks that I have tapped on with you guys, and I touched base on those, if you guys remember at the beginning of the presentation. So when to trade the smaller time frames and when to trade the higher time frames, this is proprietary. This is proprietary for myself, for my own research, and for my mentorship that I have done. The 1 minute chart and the 2 minute chart is great to focus on if you're trading from 9:30 to 10 o'clock. That is the high gear momentum. That is the fleecing time. It's also called the amateur hour because that is the time when the first 30 minutes when a lot of traders, beginner traders, will just blow up their accounts and blow up their money. The next timing that is so important for the market is the next 5 minute, which is from 10 o'clock to about 11:30. That should be your zip code. If you're new to the to trading, whether stocks or whatever you're trading or futures in particular, use the 5 minute chart altogether from the open to the close. 15-minute charts always during the doldrums. They're all very, very flaky during the doldrums. And then back to the 5 minute once the doldrums are out of the picture from 2 o'clock to about 4 o'clock. If you're trading the Asian and if you're trading the London session, I find that my best time frames are the 1 hour and the 4 hour, and I particularly look for trades around 9 to 10 o'clock at night. And then for day trading, London session, the 5 and 15-minute charts, and I would highly suggest the 15-minute charts. I want to share with you right now, basically this is the trading plan in one slide. So for the New York trading session. So market timing, what does it mean? There are certain sequences into the market when events happen. First of all, you have the 9:30, which is the market open. That is when the big US power push is in, when the US contracts are hitting the tape. And you're going to see a lot of fleecing going on. Then you have the 10 o'clock. 10 o'clock is notorious for and noted as a major reversal time into the market. So what happens? If the price shoots down into 10 o'clock, the price action is going to rotate at 10 o'clock. If price moves up into 10 o'clock, then the price is going to pull back from 10 o'clock. Do you guys want to see what happened today? Put my money where my mouth is. 10 o'clock, right? So the price opened in the Dow, bam. What had happened at 10 o'clock? Do you guys see the 10 o'clock? Reversed. What happened in S&P? Bam, down into 10 o'clock. What happened after 10 o'clock? Reversed. What happened into NASDAQ? NASDAQ down. Look at this wick, down into 10 o'clock, then reversed. And look at Russell, down and then reversed. This is pretty awesome, right? Really cool stuff, guys. And this is happening every single day. And then there's another big inflection point, and that is coming at 10 o'clock. If you have the market rally from 10 o'clock to 10:30, what do you think it's going to do at 10:30? It's going to pause a little bit. If it has ultra strength, it's going to pause and it's going to start rallying again within the next 15 minutes or so, maybe even sooner. If not, it's going to start to pull back, maybe a very shallow pullback, and then the trend is going to continue higher. The most important thing for trading is the timing between 9:30 and 10 o'clock. If your asset, the asset that you're trading, makes a high or is trading borderline with a high between that bracket from 9 o'clock to 10 o'clock, it's going to rip. And if the price action is lower into 10 o'clock or 10:15 and it's not rotating at 10 o'clock, it's set to fail. All right. So Is it easy to succeed in trading? Well, think about trading like this. Trading is not about strategies. It's not only about mindset. It's not about experience, attention to detail, education. It's a system. So you need to have everything. It's not that you have to have, education without experience is zero. Education without management is zero. Mindset without strategy is zeros because you need to implement that. So hard work does not guarantee you to get up there. In fact, 90% of the traders don't because they don't follow the rules. It's a rule-based system. I'm going to tell you one more thing. We talked about the 9 o'clock to 10 o'clock. So if the price goes up at 10 o'clock, here's the reversal times, right? Because I showed you with the pullback today. This is the inverse. And here's the pullback at 10:30. Usually the trades that are happening from 9:30 to 10 o'clock, they're super quick. Take your money and run, done. And if you're sitting around on a powerful trend, if you have trades that are lining up around 10:30, these trades are going to last a long time, baby, just like we are today into that sequence. So if trading was easy, trust me, it's not about reading a book. You could get 200 million books from Barnes and Noble, from Amazon. It's not going to help you. It's not, because you need to put it with experience. Indicators, they're just going to delay your process. If you want to trade with an institutional grade, if you want to trade the institutional grading, with an institutional grade trading system, and if you really want to kind of take a deep breath in and start trading stress-free with institutional levels, precise buys and sell zones, management and proper risk management for all your trades, high patterns and setups, you're going to learn how to put the pieces together and how to put the puzzle together, read into the trading psychology each and every single day. And it's basically putting all the puzzle together. This is all it's all about. The trader that puts the puzzle together the faster, guess what? It's going to be the winner in this field. So if you want to make 6 to 7 figure income, you need to make decisions. You need to follow somebody that has already achieved what you want to achieve, like on paper, like literally, like with proof. Be wired for success mental, because if you come to the trading and say, oh my God, I'm so scared I'm going to lose money. Yeah, you're going to blow up your account because your mindset is on losing and not making money and not paying attention to the chart pattern and to the price. Follow that person long enough to steal their secrets and develop your own. And that's what trading is all about. So if you want to join my trading room, I'm here to let you know that this room is for you if you're losing money in the market. If you're not making money, and if you're ready to say, hey, I want to shift, I want to start making money in the market, I want to trade just a couple hours a day, make money, and be done. If you do not want to be glued to your computer all day, if you don't have a system or a trading plan and you are disoriented in the whole trading process, if you don't have a process to eliminate emotions and stress, if you lack confidence, not knowing, when to go long or when to go short with confidence, because a lot of traders may go now like, oh my God, I'm going to short, the market is so high, it needs to pull back. There's a certain time when you do lunch fades, right? Oops, I said it. There's a certain time when you do fades, right? And that's lunch fades, and it's not now. That's not lunch yet. So if you don't recognize the setups, if you don't know what a setup is, okay, not having the proper trading discipline, if you don't know how to minimize your risk and maximize your gain, if you don't know how to grow your account, or if you're just blowing up account on account, this is the room for you. If you want to succeed, you have to shift your mindset from the welfare trader, not successful, pinching profits, losing on trades more than you gain, blaming others for your failures and losses. You have to shift towards the millionaire mindset for a successful trader. It's all about there. We trade live every single day, a proven system, and we trade in sync with the power moves. I'm not waiting for the institutional money to tell me where they're shifting, because I'm seeing what is happening and I'm in sync with them. So if you want to join the trading room, we're open Monday through Friday from 9 o'clock until 11:30 a.m. It's not p.m. It's $2.99 a month. And what we do is we open the room at 9 o'clock. Shortly after we open the room around 9:15 or so, I come on with the pre-market game plan live. We do institutional trading levels, 100% real-time precise trading, 100% guided trading. So you guys are going to know exactly where I get in. It's going to be on the mic and posted in the room. We trade about 1 to 3 trades a day with the exact parameters for entries, for stops, for targets, live trailing for all the room. I tell you when to take partial profits, when to move the stop, and where to move the stop to, whether to stay in or get out of the trade. So I tell you every single move that I do, because that's the way I trail my trade. So I am just not here to show you how to trade, right? I'm doing my own trading because my number one objective is to make money for myself. So if you want to make money, I'm very serious about my money, so you can just follow me. This is an example of some trades that we did a couple of weeks ago into the CPI numbers, and I announced my traders to be here at pre-market. We really don't often trade pre-market, but this is the pre-market market that we had. And I said bullish above, all these levels right here. Take a look at the chart patterns. First, we had an explosive move here, then the second time around here. Okay, so look at this. Done for the day. The market hasn't even opened and we were done for the day. Okay, so the Powerhouse trading room is for you if you want to trade with us. Like I said, we do have a lot of reviews. You can talk with the traders that you have. You're also going to get access. This is the biggest thing. You're also going to get access to the track performance. For example, this is our track record for this year. You can find all the other past years from 2017 to 2024. So this is what we made. This is a tracker per contract. Okay, I trade the way I trade, I don't trade I don't trade one contract at a time. I position size. So sometimes I trade 5, sometimes I trade 20, it depends. This is the monthly performance, transparent from my personal account. You can see it right here. This is February, this is March, this is April, this is from my personal account. May was the best month so far. We had huge trades. Like I said, we had natural gas and gold swing, and we made a lot of money. So you can see here, this is the proof. You have the risk management sheet right here. We provide you with a risk calculator and with a position size calculator. You can customize it according to your account size and your chosen risk. And it shows you exactly how many contracts you should get in the trade with. That is a game changer. You have guidelines here, recommendations, what a hard stop and how a hard stop should be used. Funding, you have roll dates, you have year-to-date performance right here, and you have some past years just by comparison. You have option expirations and quadruple witch expirations calendar right here. You have layouts if you're using a Thinkorswim platform provided by Schwab right now, not by TD Ameritrade. We have additional charting that we're offering. You have holidays. You have a lot of things. You have indicators that we use. We have limit down. This is a very important document in case you're getting a black swan event. So you have so many things. You have a Fed Watch tool here. You have videos. By the way, we had a market projections in 2024 for in January 2024 right here live, and we're going to do half a year. We were the ones that said, and I'm going to take some clips from that, and we said that NASDAQ is going to be into 19,000 by June. Bam, here it is, almost at 19,000. And it just hit 19,000. Now it's in a pullback. So pretty much if you're interested, you can go on here. I'm going to copy and paste the link for everybody. If you guys want to join, fine. If you don't want to join, good luck to you. It's a really amazing market to trade. And this is where you sign up. You also have the opportunity to sign up not only for a full month, but you can sign up for 1 day. This is not renewable. You can sign up for 5 days. It's not renewable. And if you think like, yeah, I'm going to go for it, you could jump to the monthly or better affordable on the yearly. So thanks so much, John and Kate. I really appreciate you guys having me in here, and good luck. And I hope you guys are going to have a great summer.